region around the Great Lakes has been called a heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong. So,
manage money, piling in.
Double digits higher.
At this point, we're in kind of uncharted territory.
there's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Monday, September 22nd, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Softer markets overnight. We had December corn down 3 1/4 at 4.20 3/4. November soybeans are down 14 1/4 at 10.11 1/4, and December Chicago wheat's was down 5 1/4, excuse me, at 5.17 1/4. This morning we had export sale announcement, 320,068 metric tons of corn to Mexico, and that was for 25. Looking ahead to the start of the week, no real progress on the grain side, agriculture side from Friday's Trump-Xi visit. I think that's kind of gotten into beans a little bit. We also had Argentina delaying their export tax till October 31st when talks are scheduled to resume in South Korea between Trump and Xi. So that was announced here this morning. And harvest keeps rolling on. Weather looks good. We should continue to see big progress there, getting these crops out, which is good for everybody there. So with that, Justin, maybe a few thoughts to kick us off here as we start another week, and then we'll throw around the room.
Yeah, I don't think anything too different. I mean, we're obviously still getting more and more yield results. Like we've talked about for a long time, we had such a dry finish to August for the bean crop and corn crop, I guess. But beans, it's typically made in August, right? And the early yields, at least that we've been hearing, have been surprisingly good. Especially in these dry areas. And now we'll see how that, if that changes as we, get into later planted beans. Obviously, that's the assumption, is that yields will, trail off. But we have a demand problem in beans right now on the export front, right? We've talked about a long time. So November beans are back to exactly the same prices we were before the August report, when we kind of got a shock on, lower acres. So we've taken back all those gains, unfortunately, just hovering, 10, 11. So it looks like we'll probably try to test $10 and see what's below the market. But, with no really good trade news and China basically absent, it's just hard, even if you assume the yields will be down from the government report, which I think is, also kind of a hard assumption right now. We haven't really seen enough yields that, say it should be sharply lower by any means. So I think the demand story is just kind of overall weighing on the market. Corn, I guess my thought is, we rallied into those really big areas. You had a really nice 40-cent rally going into harvest. So it's just hard to rally through harvest. I think we'll see what these, yields, I think, have been maybe the opposite on corn a little bit, maybe disappointing, the early yields to a degree. Obviously, there's some really good ones out there, which we're going to have, some people with record yields that have such a big national yield. So I'd say that's, we just rallied to a price where, we probably lost a little bit of competition. We got competitive with some other areas, and there's good farmer selling. And no matter what you think the corn yields is, it's going to be a big crop, like we've talked about a lot. So there's going to be a lot of bushels moving.
Yeah, so, nice to see Mexico still in for corn this morning in a pretty good way.
Yeah. I mean, we've talked about a long time. I mean, corn's got a really good demand story, and it's just got way too many acres and too much supply to run away. I mean, that's why we're at, we did trade 430 with 98 million acres and a record yield. So, I mean, I think if it wasn't for the demand, we'd be a lot cheaper, obviously.
Yeah, sure. Dustin, thoughts as we start the week there? What's on your mind?
Yeah, I don't know what else to say besides that. I mean, it's, we want to see what harvest pressure is. I still think you get into all of these acres, and we had huge spreads going out of old crop into new crop, not suggestive of pipeline carryout like the WASDE report says. So like that's going to be known September 30th. So, week and a half from now. I think you look at like the spreads, D's to D's, D's 25 to D's 26 is at about a 39-cent carry. So it's narrowed up quite a bit. And I think a lot of this focus on these lower yield estimates has given a lift to the market, and part of been the lift to the spreads, even though the spreads haven't gained as much. But when you get into a situation where if 98 million acres are harvested, even if you're at a 180 or 181, you're still talking a record crop by a long shot when you came in from plenty of supply meeting demand, i.e. why did we have wide spreads? If we didn't really have a tightness going into it and then we're harvesting a record crop, I still think your risk is going to be that the front end gets whacked worse than the back end. It's my personal opinion. So when you get to that like midpoint, like that slot of harvest, I think that would be the one thing I kind of watch out for. You have some other good momentum things like the currencies, the dollar index, gold's hitting new all-time highs again. The Brazilian real is up, almost 18% on the year. A lot of like really positive macro things, but short term, I think we have a bit of an oversupply situation, which is where the spreads come in.
Yeah, just to add to that, Dustin, I think that's even more reason why the spreads could be vulnerable, just because you do have such a kind of a turning, or at least it feels like maybe a turning momentum on the macro side of things on currencies and commodities. So if you were to see like an influx of money, to buying commodity baskets, and I know some of the big banks have already kind of suggested moving more towards commodities. If you were to get that inflow, if you start watching, what do the index funds do? If some of this money starts pumping in, that could artificially, push the flat price higher. Not artificially, but that fundamental could push the flat price higher. But then you still have an oversupply situation, right? So that would even be more reason. So the more bullish that the macros get, I would suggest it's more bearish spreads.
That's an interesting conundrum, battling that out. Money versus supply. I mean, we've seen it happen, but
yeah, we've seen it happen several times actually. Really the 2008 through 12 time frame, we saw spreads get super wide when flat price went up dramatically, when you had a lot of investment money coming back because it looked even more. And I kind of think we're in the situation here with corn specifically, where the further you look out, the more friendly it looks.
Yeah,
so
you're starting to see acreage suggestions flipping for next year as well. Like private estimates and stuff coming out. So that,
yeah, I mean, yeah, and even even if you say the demand numbers are very lofty, and you got to realize we're looking at 98 million acres and a gigantic yield to get to a 2.3, 2.4 carryout.
Mm-hmm.
So I mean, you have to. And we talked about this. I mean, the world excluding China, how tight global corn stocks got. And I think that's why we're seeing such a big demand number. So how do you keep 98 million corn acres? I think that's really tough to do. So, I think the fundamentals look more friendly as you go forward.
Ben, what do you got for us here? What's your thoughts?
I think with beans, we got back through all those moving averages again, and we get to find out what the appetite is for the managed money, if they want to short beans or not, considering the negativity surrounding it. I think they will be reluctant to get wholesale short only because of changing macros. I think another interesting thing to watch with soybeans is a lot of the good beans are in an area where they don't have an outlet for them now. And Eastern Corn Belt beans so far are not coming in great. There's also a lot of double crop beans out here that are, you never know until you get out there, but there's not a lot of optimism around them. So I think Eastern Corn Belt people, you know, we've seen this play out more often than not in corn, where it results in really strong basis. But I think this year, looking forward for soybeans, that's going to be something to keep your eye on in the Eastern Corn Belt, because I've had some pretty poor yield reports versus expectations in soybeans.
Are guys starting to ramp up pretty good, Ben? I mean, you got majority of your guys going, and
yeah, over the weekend it really picked up. I would say everybody's trying to do something. We do have a week here of 20 to 40% chance of scattered showers every day until we get to next weekend, and then it looks pretty wide open for a while.
Yeah, I wanted to add to that too. Ben, you mentioned a good point on this soybean position by the funds. So, Jack, if you can pull that up, they've flip-flopped a number of times. They've never built a big position this whole year for beans, unlike corn. And like even just in the last couple of weeks, they flip-flopped from long to short on small position. And this orange line is their total open interest has declined substantially. So even the funds don't really know what to do with beans. It just kind of quantifies this like large sideways action we've had all year. You know, it can't get too cheap, but then we don't have China business, so it can't get too expensive either. So it's been coiling for so long that if something changes, this is what we talked about. Like it could get really interesting because the positions have been so lackluster up until this point.
Well, and you add in just the unknowns with like diesel, renewable diesel. I mean, you have like soybean oil, for example. Just look at that market. It's it's exaggerated soybean chart, but it gets really excited. You get all these positive announcements, and then you start reading the fine details. It's like, or this could happen, or that could happen, and there's just so much unknowns in the bean complex right now, which I get. Like, it's hard to have a strong opinion because you could make the case for $9 beans or $12 beans. And I think that's that's shown in all those charts that you just showed. Just the non-conviction of managed money, because how could you?
Very good. We got a couple minutes here. Let's move quickly over to livestock. Ryland, we had Friday's cattle on feed. Viewed kind of most through the trade as neutral to maybe slightly friendly here this morning. Placements kind of being the highlight. And then on the hog side, feels like we're slowing down just a little bit as the supply, sort of seems to be freeing up a little bit. So I guess share some thoughts here as we start the week, and then we'll wrap her up.
Yeah, so a couple things, obviously the cattle on feed report generally pretty closely in line to trade estimates, but I mean, it still paints kind of this longer term picture of just how tight things really are. I mean, placements lowest in 10 years, and then you got the lowest marketing number on record. So, I mean, overall, it just seems like, we rallied into the report. I think everybody's expecting something friendly, and maybe got just a tinge of that. So wouldn't be surprised to see a little bit firmer of a start here, even with cash and beef starting to seasonally decline. There was another report of screwworm within 70 miles of the U.S. border. So I think just that can be looked at a couple different ways. Obviously, the border isn't opening anytime soon, and something like this, as closer and closer it gets to the border, probably delays that, and maybe just it ups the timeline on some of the countermeasures to this. So I think just overall, you're coming into a pretty generally supportive picture kind of coming into the day, just reaffirming how tight everything is. But on the other hand, the near-term factors are still going lower. So it still feels like this is why we're hugging that 40-day moving average pretty closely. But yeah, on the hog side of things, I mean, managed money has been actively buying this market again. They've got a record long position, adding 7,800 contracts the previous week. And cash and everything had been holding up really well, but it seemed like you got a little bit of a down there just at the tail end of last week, down almost $2 at 103.61 for cash. So I think just overall, maybe we see a little bit of caution here before the hog and pig report here on Friday. So overall, just seems like the news was more on the kind of weaker side, and the cash tone maybe softening a little bit. May even see some of those kind of seasonal trends start to pressure this market a bit lower here. So I think you're going to try to bake some of that in here early this week.
Yeah. So, I mean, was there, any, this screwworm case, Ryland, it's not like they were talking about opening anytime soon, but I mean, what's the chatter in terms of like, is this an extension? I mean, like, what's it gonna What's it going to do to the psyche?
Right. I mean, the only thing I think that the USDA really acknowledges that they're going to try to release these sterilized flies into the population just to kind of control the spread in and around the border. But I mean, there really is no, there's no real timeline right now. The market got really scared when Secretary Rollins actually was going to have a press conference because people thought she was going to open the border. So the market was risk off for a little bit. But I mean, at this point, I think it just exacerbates the current situation. I don't think you can open the border in this environment where this screwworm situation just keeps on moving further and further north. So as of right now, it sounded like they were still on this 3-year timeline to build this facility and throw, $800 million at it. Maybe it just gets some more funding for the time being. But yeah, there's just no real guidance, I would say, with anything concrete on a timeline.
Very good. I appreciate the update. Just open the markets here. We get December corn down 4 1/4 at 419 3/4. November soybeans are down 18 1/4. 1007 1/2 is the last. And December Chicago wheat's down 6 at 516 1/2. This afternoon we'll get crop progress out at 3 o'clock Central. So we'll look at that and visit about that in tomorrow morning's War Room. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every morning that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.